there are opportunities for this market to continue to fall if we don't get these things done, right? If we get these things, I said at the beginning, tariffs and taxes have to get done. If they don't, I could see this thing getting ugly. And this is just the beginning.
All thoughts and opinions shared in this recording belong to the participants. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business.
Hey everyone, welcome to this week's Market Moment. I'm Lee Mackey alongside Isaac Johnson, John Martfeld.
Morning.
How are the fellas doing?
Fantastic.
We're good?
Yeah.
Fantastic.
March Madness officially over.
Officially done.
Sadly over.
Basketball is in the books for this season.
Yeah. I mean, we were just talking about that before getting rolling. Like, it's Masters draft, and then it's kind of a lull.
It is kind of if you're a baseball.
Yeah.
College baseball,
If you have the time to watch 180 regular season games,
Yeah.
absolutely.
If you're a college baseball fan, like we in Arkansas are lucky to have such a great team.
That's true.
So that gets through May and maybe a little part of June.
Hopefully June.
Yeah, hopefully June.
Hopefully June.
Yeah.
But basketball season's over as far as college basketball. Masters is this weekend.
Oh, love the Masters.
It's a good time of year.
It is.
I mean, it does kind of indicate we're heading into the summer. Yeah. But and they're already, talking about football.
I know. We had snow flurries Sunday morning, and now we're going to zoom to Masters, and we're going to be in the 80s this week.
Yeah.
And
It's gonna be hot.
Yeah.
I love this time of year.
Springtime
Going
in
from-
Arkansas.
Yeah, leaving the winter behind though. Eventually, I think that might be our last cold spell.
Yeah, winter
Knock on
typically
wood,
leaves
hopefully.
kicking and screaming.
Yeah,
So
it does.
anyway, as I say, tongue in cheek, not a whole lot going on
Yeah.
Yeah.
in the world
Real
these
calm
days.
day. Uh-huh.
Life of a financial advisor these
Yeah.
days is pretty boring. Good time to take off.
Yeah.
I saw a couple of friends of mine a few weeks ago, and when I went back to Tulsa to visit, and I had told him that I started working here about a year ago, and he texted me on Friday and was like, "Heck of a time to get back into financial planning."
Yeah.
I was like, "Yeah, couldn't
Yeah.
have timed it better."
Yeah.
We are, if you've been living under a rock, what we are referring to, last week, the tariff, what was Trump's called? Liberation
Day.
I think it was last Tuesday or Wednesday. And I think the consensus was it was a lot more aggressive than even the most staunchest tariff proponent was expecting. Roiled the markets. I mean, just, what was interesting during his Rose Garden speech that afternoon, the futures, it was after the market had closed, the futures were actually up.
Yeah.
1.5% during it, and then just fell off a cliff that evening.
Yeah.
And then, of course, everybody knows kind of what the last few days have been. Thursday and Friday of last week were very negative.
Yep.
A lot of selling. Yesterday was probably one of the wilder days that I've seen in my 30-year career from a sheer,
Yep. Up, down.
volatility.
Yeah.
The VIX. I don't know where the VIX is at, but man, we've been bumping up on 50.
It was like a Razorback basketball game. I mean, we were up 20, down 20, up 10, down 10,
And then,
all in like
and then lost.
and then lost.
Then lost. So anyway, we want to spend a few moments this morning just kind of digesting what we've seen. We'll give our thoughts on, what brought us here, what we're experiencing, kind of where we go from here. So, I'll kick it off with either one of y'all. Y'all want to kind of add?
Say whatever. Yeah, no, it was. I think it was pretty priced in beginning of last week that it wasn't going to be as drastic as everybody thought, was kind of the consensus. And when it came out, the 30+% almost across the board, as high as 50 now. I think China's at 102% as we speak. And so a little bit of shock. And then we saw, a false news report came out yesterday morning that they were going to put a pause for 90 days and just saw the markets shoot right back up. And so that was honestly kind of a positive for me, looking at that, seeing, once these things get sorted out and these countries start calling and we can actually come to the table, things are right back to business.
Yeah, it's this is so funny to me. Having done this for so many years, and you know this, Lee, going through it. First of all, this was the 11th largest loss in U.S. market history over a shortest amount of time, right? And you go back and look at all the other losses that are ranked ahead of it. There, about 8 of the 10 losses ranked ahead of it were all around the Great Depression, as in days and weeks of loss. It's pretty amazing that this was. I mean, you know, this was a pretty big couple days. And I agree with you, Isaac, 100%. There's a little sign of positivity, and the market shoots back up. So the market's just looking for answers, these things to get solved, and they will get solved.
Right.
There are 2 things that I think the market is anticipating or hoping gets done. That's the tax.
Yes.
You know, getting the tax stuff done, which surprisingly is not done yet, which I thought that would be the no-brainer of the century once
It's
Congress
not
started.
even being
I haven't heard anything being
I know
talked
it's not even
about
being
at
talked
all.
about, but it is there, and I know there's 4 Republican senators that are kind of balking at what they're trying to do. So they'll get that fixed. That I think that's like 90% that'll get done. The tariffs I think will get done. It might take more time. So I did some deep diving, you know, as I like to do, because I've heard all kinds of news and information from all kinds of sources. Right? Some positive, some negative. Some that think, you know, Trump's crazy. Some thinks he's a hero. Whatever. And I wanted to get my own read on it, as I encourage everybody to do. I would not take anybody else's word for it. Do your own study on this, and it's not hard. You can go to ChatGPT and ask it a question. You'll get all the answers you want. Anyway, I looked at the Canada because I thought Canada was our friend, and you know, I was a little bit miffed at how tough we're being on Canada. Right, and that was one. I understand we're being tough on China. I get that.
Yeah.
But I didn't understand the Canada, so I did a deep dive into Canada. I found 8 things that Canada is not complying with U.S. With what we are asking them to do, and it's not just through Trump. It's Biden. It's through previous Trump. It's through Obama. Things that we've asked them to do that they continuously say no to. For example, like not putting their fair share into the NATO budget. There's many things, not complying with certain things. And I know those have been brought to the table since Trump has been elected. And there's about 8 specific things. And they have said no to all 8 things. And I read that and I look at that and I'm like, you know, they're not as friendly of a neighbor as we like to say. And if you watch the media, it's like, oh, poor Canada. Trump is really attacking Canada. But when you look between the deal, we have given them and we have continued to give them more than they give us back, right? And you can say we're in better shape and we're the better country and all that stuff, and that's great. But there's a point when we're running massive debt that we are, and we're spiraling towards this horrible. If we don't get our debt figured out, we're in trouble as a country.
Yeah.
And so you have to get tougher. So, you know, the going with it with a jackhammer instead of maybe just a small hammer, maybe a big deal. But I think it's all going to get worked out. I guess is my point. It's going to get exposed. All these things are going to get thrown out there, and with the, you know, what do they call it, the dirty bathwater or whatever that saying is.
And Canada's has a big election coming up. And so
right.
I think a lot of this is probably driven by that and trying to have our influence in that as well.
Yeah, I think this is all going to pass by at some point. And Canada, Europe, China, especially China, they need us more than we need them.
You know,
that's the end result, and it's gonna work out.
At Trump's speech last week, you know, he had this board of
all the countries,
30-something countries or so that he was levying tariffs on, and you know, one was Vietnam. You know, and I didn't realize what a big player Vietnam is with a lot of the goods that we get.
Yeah.
But when I first heard that, I was thinking, poor Vietnam. What did they do to pick this fight? I did not know that the reason we levied such severe tariffs on them is not necessarily because of them as a country, but China uses Vietnam as a backdoor. So China uses Vietnam as a way to get around their tariffs. They run them through. And
Canada does too, by the way. The USMCA that we've created, you know, under the Trump administration, the first Trump administration, which was a good trade agreement. The problem with that is that China is doing the exact same thing through Canada and getting stuff into the United States with less of a tariff than it would be from China.
Correct.
So it's kind of like there's a lot of little sneaky things happening that I think is going to be exposed.
You know, and I think that, you know, going into this, I think most business leaders, a fair amount of political leaders agreed with the premise that the field needed to be more level than it has been. I mentioned it that I felt like Trump brought a sledgehammer when it wasn't really needed. And now Trump does not have a history of backing down. He doesn't have a history of like, you know what, my bad. So we'll see. We'll see if the people, who is he going to listen to? Is it going to be the Peter Navarro that says, you stick to this course and, who cares what the stock market does? Or do you listen to this room of CEOs and other political leaders? And it will be interesting. Now, the thing that we've been hearing over the course of the last, week-ish is the threat of a recession has really shot up. I want to get your thoughts on that. Forget what's gone on in the markets over the last, few days. But the talk of, because a year ago, boy, the recession talk was hot and heavy.
Yeah.
Then we kind of moved through that.
Yeah.
Turns out, the economy's pretty strong,
Yeah.
very strong actually. And there was less of it, and now it has roared back to the point where, I saw a survey yesterday that upwards of 65% of U.S. CEOs feel like a recession is, imminent.
Well,
Larry Fink, the chairman of BlackRock, yesterday afternoon said that a lot of the CEOs that he's talking to feel like maybe we're already in one.
Yeah.
I'm not sure about that.
Yeah.
But recession
So,
talk, what do you think?
Negative 2 quarters in a row negative, right? We'll kind of confirm that. April 30th, we'll get the reading of the first quarter. So not till April 30th will we know. Right. And I do think it's going to come in negative. And I do think that has nothing to do with what's happened with the Trump tariffs and whatever. I think this has been inevitable. And this is the point of, like, we've talked about this on the show. It's a natural market cycle. We have been on this run for so long. I go back to like 2009, not just 2022. I know we had a quote unquote recession and the COVID recession, whatever. But I'm looking at the bigger picture of going back, 16 years of really positive markets. And the market doesn't go up like that forever. And when you say the economic data is good, the economic data is good. But if you go look at all the revisions of economic data, and the revisions are all negative and are worse than down, not negative, but down from what they were originally. So I think we get a lot of that great data, and then it's a month later we get a revision, and nobody hears about the revision, right? The revision's on the 8th page of the Wall Street Journal. Nobody hears about it. So it's not as strong as I think we've been led to believe. And I also think this was an inevitable course we're going on. The government spending is so high part of our economy, which is not a healthy part of that. Government employment was so high, and I don't think that's a very good part of that unemployment rate. And then you couple that with interest rates now, for the last several years, interest rates have been high after having a 10-year 0% basically interest rate, which was easy money. And it takes time for that easy money train that ended 2 years ago to actually affect the markets, and it's starting to affect the markets. So I think there's a lot of things that are coming to head at the right time, or wrong time, whatever you want to call it. But I also think it's healthy, and I don't think it'll be a very deep or long recession. That's my humble opinion. We'll get out of it. Tariffs and taxes have to get done, but I think we'll get out of it.
The word
fast.
recession has such obviously a negative connotation to it, but like when you hear recession, you think 2008, right? You think Great Depression. You think 2000, like these really horrible times. Businesses are failing. People are losing jobs. And sometimes it's just not the case. Sometimes it's just a market cycle, like you said.
You think that Q1 sees negative growth?
I think it's going to be close. Like, I think that it's trending that all the little reports I've seen are it's going to be real close to either even or negative. It may not end up being negative, but I do think it's going to be negative. And then I think that gives you that. Then it gives the recession talk gets louder.
Yeah. I was listening to another show last week that was talking about recessions and the 2 quarters of negative GDP. And he made the case of like when Blockbuster went out of business. He was like, if everybody in your house rented 2 movies a month and then you all swapped to a $10 a month Netflix, the country innovated your household actually got more efficient, but GDP went down.
Yeah.
Like your household spent less money to get more efficient. It's just part of what the U.S. does is we do things really well and efficient. We innovate and we make these new technologies, and sometimes it brings GDP down.
Yeah.
I just want to know, did you ever see a Blockbuster store?
I've been in the Blockbuster. I used to have the card. I still have my card somewhere.
Have you really?
Yeah.
No.
Oh, yeah.
Wow.
Yeah, it shocks me. It's been a long time
That does kind of shock me.
He's a young pup.
Let's talk about the markets just briefly.
Yeah.
This is as of Friday. S&P year to date down 13.5. The S&P as of Friday actually turned negative for 1 year. So going back to April of 24. Dow Jones is down 9.5% year to date. It squeaked out for a 1 year up 1, but I think after yesterday probably gave that up. NASDAQ year to date down 19. The Russell 2000 down 18. The two bright spots, international and fixed income. We've talked about this for the past several months on this show. Modern portfolio theory, which we thought had died for years.
Right.
Diversification, is winning.
Yep.
I mean, if you own fixed income in your portfolio, you are thanking your lucky stars today because
You're right.
it has held up.
Yep.
The 10-year, all of bond yields have fallen, which makes the prices go up.
Yep.
International has actually outperformed the U.S. for the first time in years.
Right.
And so that diversified portfolio, that defensive portfolio, if you've got that right now, then you're probably still down, but you are down far less than the overall S&P and so forth. And so it just goes to show you that history will repeat itself. The market PEs, we talk about price earnings ratios on this show. The PEs had gotten so out of whack.
Yep. Overpriced.
Now, PEs can remain high for a long period of time.
Sure.
And the market be okay with it.
Sure.
But at some point, they will come back.
Yep.
And, as of yesterday, most of the indices.
They were back in line. I mean, pretty much historical.
16 to 18.
Yeah.
And so now,
which is a good sign,
do we
in
think
my
that the
opinion.
market goes up from here? I would probably say no. As we record this, the markets are all up 3% or more. Expected, at some point, given how far we've fallen. Is it a head fake? I don't know. The market and investors are, like you said initially, are begging for reasons to buy.
Yeah.
Right now, most buyers are just sitting on their hands and saying, you know what, this may be a head fake. We're not going to participate. We want to see a little bit more substantive action coming out of D.C. We want to see Europe sit at the table and negotiate. We want to see China, yes, it's great that Japan wants to talk and Israel wants to talk, but we need some bigger players than that.
Yeah.
To sit
In
down.
my entire investing career, because like you guys have mentioned several times, I'm much younger than you. The strategy has been when
And
the
taller.
market goes down, you just buy. Like it'll come right back up in like a month, right? Like you said, the last 15, 16 years, it's like, oh, the market's down 3% this month, buy it.
Yeah.
Like buy the dip. It's like my whole generation's philosophy, and this has been the first time in my adult career that it's like not really.
You
bouncing.
haven't seen anything
Yeah,
yet.
that's what I'm saying.
You know-
there's a whole group of investors that have never gone through this.
No doubt. You go back to 2008. In the summer of 2008, the market had been on an 8-month slide, right? Basically, in the summer of 2008, December 7 through summer of 08. And there was talk, and I remember going to a big conversation with a big wig guy from one of the big wirehouses, the top analyst that's on Wall Street all the time, on the news all the time, whatever. And they were talking about how it's overblown, banks are fine, everything's fine, we're going to be all right, and go back to buying, everything's fine. And then from that moment on, actually the bulk of the 2008 financial crisis loss happened after the summer of 2008. It happened in the fall of 2008. In other words, you could be in this feeling that things are going to be okay, and the market goes up a little bit today, and this is the point where I think things can go really bad. If we do not get anything done and China and U.S. really get into a tariff war.
Yeah.
And if Europe doesn't come to the table and they side with China, for example, and they start doing deals with China and we are left out, this market this could be 2008-esque. I mean, because Trump's not going to back down.
Right.
We all know that. And then you talk about how we wish he'd go a little slower. He told us when he was running for the office, he's going to come in and work his butt off. In the first 100 days, is going to be historic and all that stuff.
Yeah.
Well, he's not kidding, right? And some of that doesn't always work in our favor, but that there are opportunities for this market to continue to fall if we don't get these things done. Right? If we get these things, I said at the beginning, tariffs and taxes have to get done. If they don't, I could see this thing getting ugly. And this is just the beginning, and I hope that does not happen, right? I mean, there's always an opportunity. And that goes back from experience of going through the tech crisis of 2000, the 08 crisis, the COVID, all that kind of stuff. You learn that everything is cyclical. International stocks don't stay down forever. Fixed income doesn't stay down forever. Small cap stocks don't stay down forever. But eventually, they revert back to the mean, and this is happening now, which is back to diversification and what we do here, which is keep people out of this mess for the most part, which is why I love what we do here.
Yeah.
Anyway.
Thoughts on that? Great. It's well.
I agree with everything.
It will be interesting. The thing that's been a little bit unique about this one was 2022 was a down year, start to finish. I think the S&P was down 24, 25%, 25% for the year. Yeah. It didn't all happen in 2 days. I think that has maybe what has gotten some people's attention is that this was, we had 2 consecutive days, 5%, down days. And that will get even the seasoned, advisor or investor's attention. And so, what we tell our clients is, stick true to your plan. There are going to be buying opportunities. I'm not saying that we've hit the floor. I think we're probably, this is Lee Mackey's opinion, that we're in that trough period to where whether we've hit the floor, whether there's more to go, you're in that good buying area. And we saw a few people yesterday begin to nibble in. We'll use Walmart as an example. A few weeks ago, I bought a client Walmart at $97 a share. And that was well down from its 110. Well, it was at 83 yesterday.
Well, and look at if you were in a coma for a year and you woke up today, right? And you had bought Nvidia stock a year ago, you would have paid like $90 a share for it, and you'd be up $5 today, and you'd been like, "Oh wow, I'm up $5."
What a great year!
I'm up 7%.
You didn't see that you got to 145.
Right.
The point is, like, if you look at relative terms, we went really fast. Those 7 tech stocks really drove the market, and Walmart has been a stalwart. Cruised better than I've seen it in my lifetime, right? Other than splits and stuff.
There was a great article.
Crazy.
There was a great article that came out, I think maybe last night, about Walmart and how if we go into a recession, typically a company like Walmart fares well.
Yeah.
It's Walmart Plus. The Walmart Plus, the annual subscription is
Dropped my groceries off this morning.
Kind of their game changer.
Yeah.
So it'll be interesting to see what transpires in the markets over the next few days. With Trump in office, there's never a dull moment.
Never a dull moment. I do think in the next several years, like, stay the course. There's a couple things, and Matt, our CEO, which is a lot of times on this podcast, right? He had a really nice little thing he sent out to our clients, which I really, really liked. It was like a minute long, just a kind of it's okay, the world's gonna be okay, everything's okay, kind of talk, which he's 100% correct, right? That piece was excellent. I think that people don't care sometimes about hearing that when they're watching their portfolio go get smacked in the face. They get emotional, and then they emotionally make bad decisions. Like, if you have time, if you've got time, you don't need the money right now, you've got time on your hands, do not panic and use emotion. If you're older and you don't need to take all this kind of risk, you shouldn't be taking this kind of risk anyway.
Absolutely.
That's the key.
If you're needing, your portfolio to go buy a house in 2 months,
you shouldn't be
100% in the markets.
Exactly.
If you're 45 years old and you plan on working for another 20 years, then
you're all right.
then
Just
you'll-
another year.
Exactly.
Yeah.
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 Exactly.
It's a buying opportunity too.
Absolutely.
If you're dollar cost average 401ks or whatever,
Yeah,
it's a
this
great
is a
opportunity.
401k dream.
You know,
Yeah.
Matt and I talked late last week that, we talk about how investors have short memories, but, we do too.
Oh yeah.
We
100%.
we forget that, we
100%.
were down in 22.
Exactly.
And we were down, in COVID.
Technically,
So,
22 recession.
yeah, technically.
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 Actually,
There's still
technically one in 2020.
And in 2020.
I know
Yeah.
exactly.
So
kind of-
anyway, interesting comments. I knew this morning when we had the podcast scheduled that it would not be hard to find something to talk about. But we share with all of our clients and prospects and those that are listening, friends, stay the course.
Yep.
Don't. We've always talked about don't get emotionally, wrapped up in money.
Exactly.
As always, we hope that you have liked what you've heard. If you will and have not already, go out to our YouTube channel, like, subscribe, tell friends, tell family about it. We get stopped every now and then, church, grocery store, people are listening to it, finding ways to watch, and we hope you'll do the same. For John and Isaac, I'm Lee Mackey, and we hope you have a great week.
The hosts of the Market Moment podcast are employees of Mach 1 Financial Group, LLC. Mach 1 is a registered investment advisor located in Rogers, Arkansas. A copy of Mach 1's current written disclosure brochure is available through the SEC website and available at disclosures.mach1fg.com.